Welcome to the Leafy podcast, helping real estate investors and entrepreneurs grow.
Let's start the show. Hey, everybody. Welcome to the Leafy podcast. Today you have me, Jennifer Glegerich, and Brian Price. Tammy is flying to Boston, and we also have a very special guest. He's an entrepreneur with over 30 years of experience in building businesses from medical clinics to real estate. He's invested in every single kind of real estate. So we're so excited to talk to him because he's done single family flips, large multifamily syndications. He is a former Texan. Well, he'll always be a Texan. Okay, so because I'm from Texas. So
Yeah.
You'll always be a Texan. And now he's been living in Oklahoma since 2003. He's married with 3 kids. And we want to welcome Rodney Miller, who is co-founder of Trident Multifamily.com. That's his company, TridentMultifamily.com. So Brian, if you want to say anything or ask him a
Absolutely.
question. Hey,
All
Rodney.
right. Well, welcome, Rodney. We appreciate you being here.
Well, thanks for having me. I appreciate it.
And yeah, why don't you, how did you get started in multifamily home investment and real estate? Has it always been that way, or have you had a job before you got into this kind of type of?
Yeah, I was a claims adjuster, and then and I was 27 years old. This is the 90s. I'm old. And had a chance to quit my job and go into the medical business and bought the clinics and all that. It wasn't until about 2003 that I wanted to get into real estate. I realized that I didn't have a retirement and that I needed to find a way to start looking towards the future and then building some assets that will take care of me and my family in the future. I started having kids. This all happened around 40, I guess. And it was just, I was going to keep the clinics and keep running the businesses, but needed a way to retire. So real estate has always been a retirement plan for me. It's not I need cash flow. I need to, make money off of this right away. It's always been something that I've just like putting money in the bank. It's just something I'm putting away for the future, and it just grows and grows and grows. And someday it will make more than probably, my full-time businesses, and I'll sell those off and go more passive with real estate. So that's kind of how it came to be. 2003, I started buying single-family homes, flipping houses and doing the rehabs and all that. And then I kind of got into wholesaling houses. I got really good at buying them, so I just started wholesaling to other people. And then around 2008, when the market crashed, there were a lot less buyers. So then I just started accumulating houses and buying and holding, and that was more of a future play. When you're flipping houses and when you're wholesaling houses to other investors, that's for cash flow. You're just trying to make money. Holding houses are more of a long-term play. You put them, you fix them up, rent them out, and then 10, 15 years later, they're paid off and they're just cash flowing for you. It's kind of like a pension or something. It's just something you can rely on the rest of your life. So I got up to about 100 houses.
Okay.
Wow.
I
Yeah.
got about 105 houses now, and they're all in various stages of being paid off. And so I put them on short-term mortgages, 5, 10, 15-year mortgages. Some are paid off, some are getting paid off, and some will take a little longer to pay off. But really with those short-term mortgages, I make no money off of them. It's just something I know someday will be paid off and worth a lot of money. And that's kind of my retirement plan overall. So.
Okay.
So, but you also do multifamily too. So what do you think is a better investment? Or is it the single family homes that you state you have, or is it the multifamily?
I like multifamily. I waited way too long to get into multifamily. I have people ask me all the time, like I had a surgeon take me to lunch and say, hey man, I need retirement too. I'm going to start buying single family houses. And I was like, dude, do you know how many single family houses you would need to accumulate to replace your income? It's like, what? You don't have the time. You just don't have, there's no amount of time that lets you accumulate the amount of houses you will need to make sense for you. Think multifamily, think bigger. You need bigger chunks of capital deployed, and you need to make more money faster. So, and that's kind of what I tell everybody now. I did single family for so long. It took me years to get 100 houses. I could have done 100 units in 2 or 3 months, finding the right deal. You know, it's just so much more scalable.
Okay.
You know, we're buying 250 to 300 unit complexes, and we could buy 4 or 5 of those a year. The numbers just add a zero to the numbers. You know, they get bigger faster. And
Why do you think it's so, you know, I hear that and I'm like, gosh, that just seems scary. You know, there's just this weird feeling, but it isn't. And it certainly isn't to you. Yeah. Why do you feel I feel that way? If you understand what I mean.
Because I felt that way, because it took me 2 decades to figure that out. I was scared. Yeah. It was what the rich people did. It was sophisticated. You weren't going to buy deals 50 cents on the dollar like you would a little house. Just a totally different ball game. And just never even looked at it. I was just scared. And then I saw somebody else doing it, and I was like, well, I'll look into this. So I read a couple books, and there's a process. If you learn the process, you could do it like anybody else. And it's not a rich man's game. It's a game of people that you have to change your mindset. Instead of buying single family houses with the bank, you're buying multi-million-dollar deals, and you're raising capital from other people that want to make money. And so you just got to learn a few things that you didn't know before. And one is raising capital. You know, when we do these deals, we'll raise $2 or $3 million from people that are tired of stock market returns. They want to get a 10% cash on cash, 15% overall return. They can't get that in the stock market. And so we do these deals, and we pitch them to other people, and they come join us as partners, and then we raise capital from them. And so that's a big part of the deal, is learn how to raise capital. But if you read a few books, if you join some programs, get some mentors, and then partner up with the right people, it's not a hard business to be in. It's actually easier than single family homes and much more scalable.
Interesting.
Yeah.
So you suggest people get started in multifamily homes, not single family homes. Is that?
Absolutely.
Okay.
I tell you, I've been in single family for years. I've been to all the real estate club meetings. I know all the players in my area. Nobody's getting rich. I can tell you that.
Okay.
They're just not getting rich. I mean, there might be 1 or 2 people that got 300 or 400 houses, and it took them 15 years, and they got them paid off, and they're doing pretty good. Okay. But for the most part, you know, it's not a get rich deal. You'll do okay. You know, I just kind of frame it. Do you want a lake house someday, or do you want a beach house?
Yeah.
You know? So I want the beach house, man. So I want a cabin in the mountains and a beach house in Florida, you know, right on the water. So it's just a different mindset, but it scared me for years. I didn't look at it, but it's like anything else. Once you learn about something, it takes the fear out of it. You learn it's just a process you got to follow. And if you're willing to follow the process, you'll make a lot of money. Some people don't want to follow the process because it's work. It took me 2 years of study before I even decided I was going to do my first deal. So
what if you don't have the time for all that, but you want to do it? Like, is there any way to quick start it if you don't have, like, you know, we get the same thing. We hear it, you know, too, because, you know, we do asset protection, of course, for, you know, real estate investors. So we also get this, but I just have no time, and I had no time to structure my thing. And then I get hit by this lawsuit, and then no time, you know, I'm a single parent, or I've got all these kids, or I'm doing this and blah, blah, blah. So is there any way that you can think of, like you had mentioned about a mentor, like, I would think that would be the easiest way to quick start it myself, but what do you think about that?
Yeah, the best way to get into multifamily is to invest in other people's deals passively.
Okay.
Learn the business, read a lot of books, know what you're looking at, because the first thing to do is you got to be able to look at a deal and vet the deal. You got to know the actual location of the investment. Is the rent growth there? Is it growing? Because you don't want to be in an area where the town's going backwards and dying. You want lots of rent growth in the area. You want a good, stable economy for the local area. And then you look at the project itself. Is there a good plan in place? Are they taking a C property to a B property? Is it a C property in a B area, and they're going to bring it up to the other comps and have the other comps already established? They're going to get their comps. And then the third thing is you got to look at the operator. Who's the operator? Have they been to prison? Are they securities fraud stuff against them? You got to learn how to vet so there's 3 things you look at a deal, but you learn that from reading books. You learn that from comparing deal to deal to deal. And so the best way to do is start off, invest some money in a passive deal where you don't have to do any work, but you see how money is raised. You see how they deal with you on the SEC forms.
Mm-hmm.
In terms of compliance, you see how you have to vet the property. You get to walk the property if they'll allow you to, and you learn how to vet an operator. Then if you like that and you invest in a couple deals that way, then you find partners that want to do deals, and then you start slowly moving into it. And I have one of my partners do this. He's a full-time medical device rep. He works his ass off.
Well, yeah,
but
I know those people. They work
when he gets
all the
off
time.
work and during the day or whatever, when he gets off work, he doesn't go watch Netflix. He doesn't, he takes that time and he puts an hour or two in a day and works with me and my other partner. He just quit his job to do this full time. And I got story after story of folks that had full-time jobs, started this, and were able to quit their jobs. I know a firefighter that just quit his job in our group. He was a firefighter, invested in multifamily for 3 years, did his first couple deals with partners, and now he's quit his job, replaced his income. A lot of engineers I know have replaced their income and quit their jobs. A lot of IT people quit their jobs and go into this. Something about this is kind of a little more analytical. When you do multifamily, you're working with spreadsheets, you're tweaking numbers. You say, if we raise the rent $10 a month, what's that going to do to our overall return? IT people, engineers love that kind of stuff, so they're really good at getting into this business. Yeah.
Okay.
And I'm terrible at numbers. That's why I brought in a partner who loves numbers. He's a numbers nerd.
Okay.
I throw everything to him. He puts in a spreadsheet, and then I poke holes in his theories and all that.
See, Brian's an engineer, so
yeah,
I bet
you're
he's
speaking
like,
my language there.
Yeah, I can just see him going,
Yeah. So where I hate a spreadsheet and I hate looking at deals, on the number side of it, I can throw him anything and he will just love it. I mean, he just
that's
gets
great.
Those numbers in there, man. He starts tweaking them. We can raise the rents here. We can get $20 more for parking. We can drop the expenses for, heat and air, for utility bills is $40 too much. They're managing it wrong. We can drop that down. And, he just starts tweaking the numbers.
Yeah.
How we can improve the property and make money. So
that's cool.
Yeah.
Very cool. I noticed you mentioned a few times about reading books and things like that. What book recommendations would you have for someone that wants to get into kind of multifamily home investing?
I have one. Oh, here we go. Here's a really good book. Can you see that? Here we go.
Yeah.
Joe Fairless's best ever apartment syndication book. I would start with this. This is the Bible. Big, thick book. It explains everything you would need to know about investing in apartments. There's a gentleman named Rod Cleef's got a book out. Michael Blanc has a book out. If you just Google apartment syndication books or apartment investing books, there's a ton of information out there. If you read 2 or 3, it's like single family homes. If you read 2 or 3 books, eventually you're going to hear the same crap over and over again. And then, you kind of understand the business.
Yeah.
It's that simple. 3 or 4 books. It's all the same information. Maybe pitched to you with different people, but there's only there's not a lot of different ways you can do a value add multifamily property investment. So read 2 or 3 books, you'll understand it. So you start with the books. After you read them, if you think you can do it and you want to do it, then you look for groups. Where can I get into a multifamily group? Look for your local meetup. Local meetups for multifamily in every city. Join the meetup group. You'll meet once a month with people that are doing multifamily. You'll start making connections. Then if you want to take it a step further, find a mentor or a coach. You could partner with somebody. Sometimes they'll bring you in. If you put money into a deal, they'll mentor you. Sometimes they'll charge you $30,000 and hold your hand for a couple of years. It depends on how fast you want to get into the business. I paid $30,000 for a mentor.
Oh, okay.
And I joined a big group of people out of Dallas, and then I just made it a point to go there, network, and that's where I found my 2 partners. So,
okay. That's awesome.
In the meantime, I was investing passively in other people's deals, kind of learning the business. And so it just depends. You just got to throw yourself into it. If you don't have time, you got to evaluate your life. Are you watching Netflix? Are you watching TV at night? I mean, what are you doing with your time? I mean, everybody's got an extra hour or two they could spend a day. So are you getting up at 5 a.m.? Or are you getting up at 6, 7 a.m.,
Yeah.
You can always find more time.
Do you find that it's better to do in the morning, like part of your morning ritual, or do you think that even at night it's good to find that time? What do you usually do to suggest for other people to kind of find the time to do this?
I'm a 5 a.m. guy. I get up early, take my girls. I have an ice skater, so I drop off at ice skating at 6 a.m. I'll read my books in the morning, get my workout and all that in the morning. So, and I have the luxury of I get in the office around 9 a.m. So I have a big chunk of time in the mornings. But you just got to find, if you have a full-time job and you got a lunch hour, read on the lunch hour. Just find the time to do it. But I think that's the barrier. Most people just don't think they have time. But if they really evaluate their life, everybody's got a little bit of time they could squeeze out of the day to learn and improve themselves. So,
well, that's really interesting. I would think that, I think people get, especially younger people, they're like, what do you mean a mentor? I've got a network that just seems like so much. Like, what if they don't have really the personality for that? So, I mean, you know what I mean? How would it be an easier way to find a mentor? Or do you really think that it is critical to do the meetups and things like that?
Well, this is a relationship business. So if you're not a people person, you need to become one, because if you want to raise capital, you got to get there and shake a lot of hands. If you want, this is a partnership business. If you want partners, you got to go meet them and find them. They got to like you. You got to like them. I mean, if you're not a people person, you don't have to be people. I've met plenty of people that seem like introverts in this business, but you have to get out of your comfort zone, and you're going to have to go get out in the world. This isn't something you can do from your desktop.
But you feel really, in your mind, this is really the way to go, though, because people are getting so scared now that there's going to be a recession, and they're looking at everything and they're worried. Do you feel like now is the better time to do it? Because you've already survived a big recession. So what do you think for people that are like nervous, but they're almost nervous to start because they're worried there's a recession, and then they don't want to get stuck? Do you still think that it would be good for them?
Yeah, I think you should, you can't time the markets. You can't time the real estate market. In 2008, when the bottom fell out, I had about 60 houses. People kept paying rent. I mean, I deal in apartments and in housing. I deal in kind of your bread and butter houses. Plumbers, electricians, Starbucks workers, retail workers, fast food workers. My average house rent is $750 a month. So I don't go for the high end stuff. I like the bread and butter. So when the economy tanks, most of those people have some form of employment. And, you can look at charts in 2008 when the economy fell and the housing bubble burst, and you could see the chart. Housing prices went like this. Multifamily prices also kind of took a turn, not as bad, but the cash flow stayed like this. So you couldn't sell your multifamily because the value wasn't there, but they kept making money. So if you were an investor in multifamily, you kept making money. People,
because if people lose their house, they still have to have a place to live. I mean, you're absolutely correct. And you're not the only one we talk to, but
that's why we like C properties. So you got 4 classes of properties. You guys might know this, but the A is going to be your best apartment complex in the nicest area next to the nicest mall, higher rents. It's going to be your professionals that choose to live in an apartment, but could live in a house if they want to. B's, plumbers, electricians, higher class teachers, firefighters. They're going to be not in they're still in good areas, but they're not going to be the A areas, and they're going to be built in the 80s, a little bit older property.
Okay.
The A's are going to be built. They're brand new. They've been built in the last 5 or 10 years. Have all the amenities, have all the great stuff, the gray flooring and the gray countertops, all that cool stuff. C's is going to be your workforce housing. That's going to be your retail workers, your plumbers, electricians, your fast food workers, stuff like that. And then D is your Section 8 properties, your war zones you don't want to go to at night. They're scary. The government subsidizes your rent. So the only place for the C, so when the economy tanks, A's go to B's, B's go to C's. C's can't go to D's because D's are basically, they don't want to live there. And then D's go to, there's mobile home parks, and then you're homeless. So that's basically
how that works out. Yeah.
So we like C's. C's are not war zones. They're good. You can make them nice, good, clean properties. You can improve them and do a lot with them. But they're the ones that are going to be the most stable in a downturn economy. So for your folks out there that are scared of the economy and scared of the worst place you can have your money in a downturn economy is the stock market and the bank. Okay. Those are the 2 worst places you can have. sink your money in some good C-class real estate, whether it be single-family houses or whether it be multifamily. That's where you want your money. It's stable. It's not going anywhere. They're not building any more C properties. Everything I build now is A's. You can't build a C property. They're too expensive to build. So C's stay C's forever. So, well, they can go to D's, I guess. I mean, but
yeah. In fact, we're bigger pockets. We love that platform, and they just came out with a blog post about like don't invest in Section 8. Why this can be such a nightmare, outlaying a lot of the stuff that you talked about for investors, because there are specific investors who I guess they target it because there are programs and things like that that help investors get in there, and they were weighing that, like, you'll get this if you do all this paperwork. So you're going to spend all this time, money, and effort on paperwork, and then you'll have to redo it, and you have to just chase it down just to be able to get into it. And how in the end, basically saying what B and C.
Yeah. And I do have some Section 8 houses. I'll tell you, I got about 15 Section 8 houses, and they're okay. They are. You've got to go through inspections once a year, and you got to deal with the government a little bit. But the check comes every month. The tenants are fairly decent. If you still got to screen them really well. You got to make sure they got a good rental history and all that, so you can make it work. Usually when they move out, you have a lot more rehab. It's usually a lot of times a single mom with 4 kids. And so your house takes a little more of a beating, than it would if you weren't doing Section 8. But overall, my tenants in Section 8 stay longer. And so it's kind of, you just plan for that.
Yeah.
I wouldn't have a multifamily complex with all Section 8 tenants. I can tell you that. Yeah. But a house here and there, not too big of a deal.
Okay. So you can do it, but not probably your first house. You probably don't want to do a Section 8 type of housing.
Yeah, probably wouldn't be. Yeah, you probably want to get seasoned first with some non-Section 8 stuff. Might be a better plan.
Yeah. So when did you start when did you co-found Trident Multifamily?
Trident Multifamily is a couple of years old. So my partners and I, we were all investing in other people's deals. We had been general partners on other deals and key principals on other deals. And we kept meeting at conferences, and we just kind of formed an alliance, and we said, let's take down a deal together. So we started looking for deals, and we found a deal in Pryor, Oklahoma, small little town. 100-unit complex. Is $4 million deal. That was our first deal, and it worked out really good. It was next to Google's putting little data centers all over the country, and it was Pryor, Oklahoma. It's kind of a weird little deal. It's east of Tulsa, about 45 minutes east of Tulsa. It's 20,000 people, but Google put a data center there about a decade ago, and they just keep putting money into that little town, and they just announced another $2 billion going into that town. So it just keeps getting better. And that town is just, everything's full. Everything was packed in the town. We found this apartment complex. It was 100% occupied, but the rents were still low. It was Mitt Romney's son, actually. We didn't know it until we were midway through the deal.
Oh, wow. Okay.
I think Mitt kind of tipped his son off a while back and said, "Hey, son, Google is probably, why else would he invest in Pryor, Oklahoma? 100 unit." So he was selling. He had already made a lot of money off the complex and lived out of state. Didn't do a lot of improvements to it. So we bought it, already cash flowing, doing really well, and we just had a plan to slowly raise the rents, put a little more money into the complex, make it a little nicer. It's worked out really good. So the partnership, that was the first deal. We said, let's try a deal together. It worked great. We liked each other. There was no backbiting or fighting or anything. So we decided to keep working together. And so we formed Trident Multifamily, and we just brought in an equity raiser out of Chicago. His name's Glenn, and he raises equity for startups in Silicon Valley, and he is going to start raising capital for our deals so we can do bigger, badder deals. So
excellent.
Well,
so if people wanted to invest with you in that, how do most of you mentioned a lot of IT people and engineers investing with you. How are people investing into these deals? Are they just basically have a bunch of savings, or are they pulling out from the 401k, or how is that kind of working?
Yeah, you could do cash in these deals just out of your savings account.
Mm-hmm.
You can use IRA money. It works really
Okay.
well for this. 401k, solo 401ks.
Mm-hmm.
If you have a 401k with the company, you obviously can't use that unless you've quit your job or move jobs and transfer that into a solo 401k or an IRA.
Mm-hmm.
But yeah, we take all forms of that. Like my IRA's got.
Oh, okay.
That's how I started. I use my IRA money to invest in other people's deals. So
got it. Okay, so you would use like a self-directed IRA or something like that, or?
yeah, it had to be self-directed.
Oh,
Yeah.
okay.
So you can do a Roth, traditional IRA, solo 401k, anything like that. Works
Mm-hmm.
really well.
Okay.
Yep.
Well, that's
And the good thing about these properties, we also do you get a lot of depreciation which offsets your income. So a lot of these deals, we do forced depreciation. We'll go in there and have an engineering firm. We'll look at the toilets, the fixtures, the flooring and all that, and we'll speed up that depreciation to year one or year 1 and 2. And we were able to offset that, depreciation offsets basically the gain on the cash flow that you're getting. You have to account for that when we finally sell the property. We have to recapture that, but it pushes most of your profits to a capital gains profit, which is 15%.
Oh, I see. Okay.
As opposed to 30 or 40% if you're in a higher tax bracket.
Mm-hmm.
So little things like that make multifamily kind of cool.
That is really cool. Yeah. That is really cool. So you had, I had been reading some of the stuff that you had where you talked about how a self-directed IRA, which we like that, but I want to hear your take on why it's so good to use a self-directed IRA with real estate to help make you rich. So I want to hear your spin on that.
Man, it's just, anything you can do and not pay taxes on. I've got a Roth IRA with Equity Trust, and it owns, I haven't looked at it lately, but it probably owns 30 houses. And you could just grow your capital so much faster if you're not paying taxes. So, it was the cash flow on those houses, the IRA owns the houses.
Right.
The cash flow, at one point I could buy a house every 6 months off the cash flow. The rents would go back into the IRA. You can't touch it. So before you knew it, I had 30, 40 grand and I could go buy another house. Then that happened every 3 months. And then that happened every 2 months. And now basically we can buy a house every month out of the thing. And it just keeps growing and growing and growing. And it's just, and it's a Roth. I'll never pay taxes on that. So, when I'm 59 and a half, I can start pulling that money out absolutely tax-free unless the government comes, does something stupid. But for now, the way the law reads is I've already paid the taxes before I put the money in the IRA.
Awesome.
And, people are like, oh yeah, but with a Roth or with an IRA, you can only put $5,000 a year in there. It'll take me forever. Well, if you learn to use real estate, leverage that real estate, you can find ways to take that $5,000 you put in that year and make it $20,000, $30,000 by flipping a house out of there or investing in somebody else's deal.
Yeah.
Or, doing a wholesale flip out of there. There's the ways to grow that really fast.
It is the smart way to do it. And you don't have to, I think that the problem is, and we just were in a podcast with someone else talking about how you just see the people like we meet you, right? So you're at tridentmultifamily.com and you've done all this and you've got hundreds of properties and blah, 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 blah. But they don't hear the story of how that had to build up. You didn't start out with a silver spoon in your mouth, Mitt Romney's son with flush with cash, it's just the money's just coming out of your pockets, just, ready. You just had that, right? You had to build that up. You had been working before. You had to make a leap from being a W-2 person to an entrepreneur. And, it's a process that gets there to where you're at now. You didn't start out like that, but if you make smart decisions, you can, just like you said, it can happen a lot quicker than you think.
Totally. I think I took the slow path. It could be so much faster, looking back, I think there are things I could have done to really speed up the process, but first thing, the IRA thing is easy. There's Quest IRA, there's Equity Trust Company, which is trustetc.com. If you want to do IRA stuff, go look those companies up or just Google self-directed IRA custodians and these
Or
companies
come
put
to
on-
Leafy Legal.
Huh?
I will hook you up.
You guys do self-directed IRAs?
Yeah, we do.
Nice.
We do full estate planning and all that. Yeah.
There you go. Okay.
Yeah.
There's so many resources out there.
Yeah.
It's crazy. Do you guys do checkbook IRAs, by the way?
Yes, we do.
I'm going to call you because that's next on my list.
Oh, good.
Okay, awesome.
Yeah,
Tired of paying those big fees. I want to go checkbook IRAs. So.
That's right. That's
Okay,
right. You want to be
perfect.
self-directed and have
Absolutely.
checkbook control. Yeah.
So it just comes to, you just got to educate yourself, have the desire and the willingness to put the time, the time in. If you don't, if you're not willing to start putting the time in and looking for those opportunities, it's never going to happen for you.
Yeah.
So,
Okay.
unfortunately, most people won't do that.
Yeah. So
Well, maybe they'll listen. Maybe this will be the bug. That's what we're hoping to do. There are so many people out there that we want to be able to touch. And this was our realm, Brian and I. This was our realm, digital marketers, getting people to be entrepreneurs. We started out helping people online business. Brian has scaled e-commerce business, Amazon business, network marketing, affiliate marketing. And in all of these events, we'd go to live events all over the world and we meet people talking about real estate investing. And then I took a project scaling up another asset protection and actual law firm and brought a team there, and we were like, this is really it, because this ties into everything that we're doing, but it really kind of is the linchpin, everything that you've talked about. If you can start out with this type of investing, and anybody can start out to be a real estate investor, if you just get the knowledge, then this can springboard you to really having freedom, and you can do whatever you want. And it isn't as scary because it's actual real estate. Trying to sell someone a biz op opportunity, with mentorships or just affiliate marketing, that's kind of like woo woo for people. What do you mean? I meet these people, where's this product and what do I hold? But this is a lot different. You have, houses and people have to pay rents and
Sure.
There's a way to do it that can fund a lot of other things. Plus you're bringing beauty into the world. Just a one house flipper. Look what you've done. You've taken this property, you've rescued it, and you've made it livable again. You've improved your community. You've given a home to a family, and you've helped the environment with that. They're not going to go build another big old thing. You're able to do that, or for people. So there's just a lot more that's I feel that's kind of like really cool.
Yeah. That's a fun business too. I mean, real estate's fun. Just being self-employed is fun. You guys know it's nothing like it, man. It's true freedom. You're not really free if you got a 9-to-5 job your whole freaking life. That's true freedom, is finding a way to support yourself and not have to punch that clock, man. I just can't stress that enough. I try to tell my nephews that, but they won't listen to me. They both have to.
Well, there's a feeling, there's this idea of safety, that you're safer. And
Of
you know
course.
what? You need to do that. You need to punch that clock when you're young for a while. You need that. I strongly believe that more people probably need to suffer. I'm thinking it's so easy.
No, I
Because
agree.
it
I
teaches
agree.
you character,
Yeah.
and discipline, and
Yeah.
that you have to get along with people. And sometimes, it's not echo chamber social media where I'm going to block everyone that doesn't say what I want them to say. I'm only going to hear what makes me feel great about myself. Well, work's not like that. The real life is not like that. You have to live in a diverse world, in a diverse culture, and hear a lot of things that you don't like, and you have to open your mind and your experience to it and be able to say, this resonates with me, and and this has gotten through to me. Maybe I was wrong, or no, this only solidifies my point of view. That's what makes you a grown-up,
Sure. Will you come talk to my kids for me? They won't listen to me.
I talk to kids all the time. Yeah, I'd be happy to.
They need to hear. They need to hear what you're saying.
Absolutely. Just get on a call with us and we'll straighten them out.
Yeah. But I think you're right. I think it's good to go. If you get out of college or whatever, you're high school or whatever, you should go work for a few years, and then then formulate your exit strategy, your escape plan. And now there's not a better time than now. 20 years ago, if you wanted to learn how to flip houses, you had to find that late night guru on TV and order his program and get in the mail. There's so much crap out there now on YouTube. There's everything you need to know is on the internet. You can find everything. You can read a few books on it, get your information from the internet, and then go join a meetup group. There's so many single family home in multifamily home investment groups out there that all you just got to throw yourself in the arena, man. That's all you got to do.
Right.
And there's not a better time. There's so much information out there. It's easy to learn the business. You just got to be willing to do it. So
that's right. Well,
miserable. If you hate your job, if you want to get out, stop screwing around and get out there and start meeting people that are doing what you want to do. And more than anything, learning is one thing, but when you start seeing people that are doing it and don't have jobs, that really opens the whole world to you. You say, oh my God, this actually works. This is happening. And when you see other people achieving their dreams and achieving their goals and quitting their jobs, then it really brings everything into focus and helps you wrap your brain around the fact that it can be done. Because that's 90% of it is you got to convince yourself that you can do it. And seeing other people do it will help you get there. So
absolutely. Absolutely.
Awesome. Yeah.
Well, I think that's a great way to end it on. This was really I really liked meeting you.
Yeah, this was great.
Like we learned a lot of stuff. So again, everybody, this is Rodney, and he is with TridentMultifamily.com. We have a ton of links if you want to send information or find out more about him and all this incredible education that he's given us. We're going to put all the links with the podcast. We're going to drop them all down for you guys. And I just wanted to thank you again for being here. And Brian, did you have anything you wanted to tell him?
Yeah, this was great. I think the multifamily home to get started, I think, was a really big thing for me, because I always thought me should do with single family homes, but doing the multifamily home thing, I think is brilliant. I think it's definitely something that a lot of listeners can do, and I know I got a lot out of this. So I can't thank you enough, Rodney, for being here and
awesome.
Sharing your wisdom with us.
I really enjoyed it. You guys, everybody out there, go get your IRA checkbook. That's right. Self-directed IRA. You got to have one, man. You got to have one. But I appreciate you guys having me. It's been a blast, and I just appreciate you having me on the show.
Awesome. Well, thank you. Thank you, everybody, for tuning in. Again, you can find us on iTunes, on Stitcher, Podbean, Libsyn. And you just have a great, wonderful day. And y'all go get your multifamily. You can do it. We can all do it. Thanks. And we'll see you guys later. Bye-bye.
Thank you, guys.
See ya.
Follow us on Facebook, Twitter, and Instagram.